Welcome traders, David DeBay here, Polaris Trading Group in affiliation with Infinity Futures. This video is our weekly review and preview for the upcoming week, May 1st through the 5th. And before we get to the charts, industry regulations require that we highlight NFA Compliance Rule 2-29, which simply states hypothetical performance results have many inherent limitations, and trading in futures and derivatives on futures is speculative nature and involves substantial risk of loss. Past performance is not indicative of future results. And Polaris Trading Group does offer services and products for educational purposes only on a subscription basis. So let's take a look at the big picture and see what happened this past week. Okay, so our first chart is our core large picture chart that we've been using here, and as you can see here, the most recent action has been in a downward sloping channel, which found support near the low edge of the inner band a week or so ago, and we started a rally. Well, this past week was a pretty strong week. There was a lot of activity, earnings reports, and so forth, which we'll mention shortly. As of last week, we were looking for a potential for the market to rally higher, testing the 2372 yell here at approximately wave 4, and then we opined that if the market could clear and convert that level, the next objective would be up at the wave 2 high near the 89 level. So strong move up this past week, and clearly the objectives have been met. 2389 through 2395.50 fell somewhat short of the 2400 high, but the momentum is such that we do think that it will get up to that level and test that level. That is a big options strike level as well as a few levels above that. So we do think that will get challenged at some point. Now, since prices now have cleared the 2372, any pullbacks to that level or near to that level should offer a new, fresh, renewed buying. So look to that level as a key over-under level. Should that be tested sometime during this week, we'd be looking for a buy response there. Okay, I'm looking to shift the channel here to the upside. So if we can get a pullback here, all right, we'll be able to shift our channel. But we'll take a look at that. I've already shifted the channel on the 60-minute chart, which we'll get to in just a moment. All right, so let's get to that. Okay, on the next slide here, this is what we call a performance chart of the S&P sectors ETFs, and this gives us a very good view of what has happened this past week, where the action was, and how did the various sectors perform. So as I mentioned, it was a positive week really across the board. The cyclicals, all right, over on the left-hand side, we're up 2.5%. The big standout this week, of course, was the technology sector. There was a lot of earnings there, and again, we'll show that chart very shortly as well. Industrials had a solid week. Materials, energies actually started to rebound late in the week, so that offered a slight positive there. Even though the energy doesn't show much here of 0.07%, actually we had a nice little rally at the end of the day on Friday in the oil group. Healthcare had a good week. Again, a lot of things going on with the government, healthcare bill that's going on right now, and financials had a solid week as well. So overall, it was what we call risk on. And I think that will continue unless something drastically happens, geopolitical wise or something like that. But for the time being, it is risk on, and the path of least resistance now remains still to the upside. Okay, so here is the NQ future this past week, and as you can see, this was back from 424. All right, you can see the pressure has been throughout the better part of the week to the upside here, and it created what we call a poor high. A poor high is where the upside of the profile is fairly blunt, okay, which means there's a lot of upside pressure pushing up against that level, and again, with the expectation of good earnings, all right, the bears were not able to repel the bulls, and here on Friday, all right, we had a actually Thursday, I'm sorry, we actually had a good vault in price after the hours, all right, of earnings, and then throughout the day on Friday, all right, price held full consolidation of the breakout above 55.70. So that level 55.70 becomes your initial over-under marker for those trading the NQ, and again, we'll be looking for continued renewed buy interest there and trying to work back up to the upper part of the range. Should it break and convert 70, all right, we'd be coming back down here and looking for about the 55.50 area to get a renewed buy response. All right, for those guys out there trading the NQ. All right, switch our attention over to the S&P E-mini. We have two graphics up here, the weekly profile on the left-hand side, and I created a channel on a 240-minute chart to show where the new up channel in the process of developing, all right, coming off last week. So let's take a quick look at the profile here on the left. And we want to focus our attention of where the value area has taken place. So that's between the 2378s and the 2392 area, with the weekly point of control at approximately 85.50. So keep those numbers in mind. Price closed on the week at 2380.50. So going into next week, again, our anticipation would be continue to hold within the context of that range and try to get back above the 85. So if the bulls can convert the 85.50s to new upper support, all right, then the first objective then would be go after those 2392s. Any clearing and converting of the weekly highs there, all right, really opens the door to test that 2400 level, the prior high, and with extensions up to, at least initially, up to the 05-07 zone. Okay, so that would be the bullish case. On the bearish side, the bears would need to now convert the 2378-6 zone to new lower resistance, and if that's the case, then a potential retest of the L 2372 down to the 70-68 zone, that high volume area, would be then expected. All right. I'm not anticipating necessarily that the market's going to push all the way down to the 60s, 50s area, but that is an extended possibility. Again, if the sentiment changes dramatically, but I do think the market will perhaps early in the week chop around in that middle zone and try to find the new direction or redirection from these key levels. So keep those in mind. Over on the right-hand side, this is a new channel that we've created, all right, from the gap up on the 23rd, all right, which was Sunday night, all right, into the new week, and again with that extension up to about the 95s, all right, consolidated for the past couple of days, and then now has pulled back and pretty much closed at the median line here. So again, the expectation here would be holding this this breakout candle over here near to the median line. Again, 76.78, all right, matches up pretty nicely with the weekly value area low, so keep a close eye on that for the upcoming week. For Monday, it is cycle day 3 of our 3-day cycle period, and here you can see the 3-day cycle rally targets between 98s and 24.05s approximately. And again, that dovetails pretty nicely with the extension levels here that we have out on the profile chart on the left. All right, again, possible lows on any pullbacks would push it down into, again, roughly around the 72s down to the 70 area, in which case that's approximately the lower end of the rising channel. And again, as I mentioned, expectation would be for some renewed buying around those price points, all right, if that is tested. All right, and just taking a look at the preview of the upcoming economic calendar for the week, it is pretty busy. Monday we got PMI manufacturing index along with the ISM manufacturing index. Those can be market moving reports. The FOMC meeting begins on Tuesday with the meeting announcement with no breakout meeting, Q&A later, just an announcement, consensus. And finally, running into Friday is the big employment situation number, right, the non-farm payrolls. So there's plenty of action, economically this week, and not necessarily centered around the FOMC statement, which the expectation simply is no change given the recent economic growth figures that have recently been released, and that simply is the universal expectation. The big item, of course, is Friday's employment number, and according to Econoday, their consensus is calling for a significant improvement at 185,000 jobs created for April's non-farm payrolls versus March's disappointing 98,000. So that's going to be a big number. If that estimate comes in close, we should see some activity or anticipation of activity as well. Okay, and that should wrap up this week's review and preview. And of course, for those of you that have not taken a free trial with us, by all means, we'd love to have you come in, visit, see what we do. There is the web address, PolarisTradingGroup.com/free-trial. Come in, take a look, and see what we do. All right. For additional information, feel free to send me an email, david@PolarisTradingGroup.com, or contact Patrick Zilbauer or your Infinity and Future representative for any additional information that you may need. All right. Thanks very much, everybody. Enjoy. Have a great week. Good trading to all.